The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the first trading session of the week. We're not yet 2 hours, we're an hour and 35 minutes into the day, November the 4th. And I'm here at the Tiger Technicians Hour, Monday through Friday, 11 o'clock till noon. And in just another couple of days, Friday, I'll be doing my Master Trader series. I'm going to spend a lot of time today discussing. I had questions over the weekend. I want to go through things. I want to show you what I do. It isn't just a technical picture of a look-back period that says, just fantastic, because looking back, X number of times such and such happened, X number of times such and such happened. No. This is the trades. This is what we have. This is what my opening call, my trader's corner. These are the positions we have. I mentioned the other day, I'm not that keen on doing this sort of thing because there's a certain accounting for it with the trading gods, lowercase t, lowercase g, trading gods sitting there saying, uh-oh, hubris, watch out, little showing off there. But this is the only way that I can take my information and give it to you, and because most of the stocks are up so nicely in percentage terms, I don't think my subscribers will mind at all if I do it. So let's just run the numbers, and I'm going to give you a lesson in what I do, how I do it, why I do it, and let me just put this up here so that we can get it there. A very good example, if you're looking at Tiger TV, and I had a couple of questions about it. Some people have Mac computers, at least there are Apple computers. So I'll give you the information at some point, just the questions that you asked about it. But in the meantime, back at the ranch, most importantly, I'm going to do this because I want to get this right so that I'm doing what you see. So I had it all set beforehand, but I had to change it. Here we go. The Dow is down 18. Now, this is a very interesting thing because the Dow initially started moving up, moved up very nicely, but there's a lot of resistance, and I'm going to show you how I deal with resistance with chart patterns that repeat over and over and over and over and over again. And now I can do it because I've got everything off. Get rid of that talking in the background over there. Get her up. It's down. Now, someone said, okay, how do I see the script on the right? Well, I tell you what I'm going to do. I'm going to say that this is the E-minis. This is the daily chart at 1757. That black line, this is the one on the left. I'm going to move it. So let me see. I can't try to move the actual TV picture on Tiger TV. I'm going to move it like this so you can see it. I'm going to make it nice and big. There it is. And you will see that that black line, the 9-period exponential moving average, is starting to show signs technically that there isn't follow-through momentum in some of the indicators. The MACD fast moving average moving down, but still good. The stochastic moving average, green and red, are moving down, and that's not so good, but it's still at 82%. The 9-period moving average at 1751 is support, 1756 on the December contract is support. Yep, I believe you can see pretty close. Maybe the numbers are not. Yeah, you'll see on the right. Yeah, it's at 1756. It'll be in green if it's up, and it'll be in red if it's down. And the black line, the black text with the white lettering, that's the black background with the white lettering right over there. That's the 9-period moving average support. If it breaks that 1743, could easily be hit if it takes it out by the end of the day decisively. More importantly, we made a peak D in the 120-minute chart. So I'm talking chart pattern. And I just mentioned the other day, right off the bat, a rectangle pattern. So we've been talking about the rectangle pattern for how long? Since the market opened up on the 31st. I said, okay, you see that candle right there is defining the parameters. 1751 on the downside, 1766.25 on the upside. And then I said there were narrow parameters on the upside, 1764 and 1751 to 50 is a very important support level on the E-minis. Then I didn't necessarily have to expect a peak D. I expected 1764 was going to be the very difficult resistance to break. Where did the E-minis go in the 120-minute chart? 1763. So I'm going to talk chart patterns. I'm going to move this away now. I'm going to try to make it nice and big. Weekly finished on Friday, so I can talk about that. Monthly finished on Thursday. I can talk about that. Here we go. Chapman wave methodology. The Dow is down 21, 15,593. The S&P is up, S&P is up just a fraction at 0.50 at 1762. The comp index is at 3924, up 3. The gold is up 4.80 at 1318. Big deal. So it's trying its best. That's that same pattern, that arch that goes to the M that goes to from an H pattern to an M pattern. You're going from the arch, first arch, and it repeats it. So you've got silver down 27 cents at 21.81. That was very interesting. You've got high-grade copper now down 4, breaking the support at 325. I'm a little concerned about that. I'll hope to look at it a little later on. It's not that important to me right now because I want to show bonds are up 11.30 seconds at 134.02, and you've got the dollar down 14 ticks. Now, let me just go through a couple of things because we're talking Chapman wave, and I am the proponent of the Chapman wave. I have to be. It's my methodology. I've spent 25 years just about day in, day out working on this, and for a very good reason, as my subscribers know. Why? Because, let me show you now, it's a little difficult for me to do. As I say, I don't like to do it, but there's no other way that I can see out but to actually demonstrate for you how this works and how I use the methodology, and I explain it every day. I'm showing you the 4 charts here. Right now, you don't actually have to look at the numbers on the right side. You just need to look at the chart patterns, and you can see the letters quite clearly. I'm going to go to our first position, and that is Alcoa. Alcoa, let me just squeeze this one a little bit so that you can see it very nicely. There you are. And I just want to make sure that space to the right is not too much. No, that's good. Okay. We bought Alcoa at $8.28. It is right now at $9.65. That means it's up almost 16%. Why? Because I bought it expecting that it was going to go to a peak D, but more importantly, it was the peak D extension that I was looking for in the weekly chart from a breakout of this downtrend with an inside track. This is what I'm going to be teaching you, the inside track, how important it is that when the price breaks above it, also the candle, the wick of a candle. The wick of a candle? What is the wick of a candle? If you're using the Japanese candlestick patterns, you've got the body of the candle, and then those long little legs to the thin little leg, the shadow. I don't know why they call it shadow. I love the wick. Wick is what it is. You're talking candle, you want to talk wick. So the wick is what I'm looking at, and that wick, once it got broken for leg D, above 8.69, that's it. It's on its way to leg D. But most importantly, I love to go time frame to time frame. This is almost the same thing that we're looking at in the natural gas, although we don't have a position right now in natural gas. But this is the potential pattern that it makes an arch formation, and then it starts to break out. Hey, in the scheme of things, from 18.47, the last high, it went way higher before, but 18.47 to $7.63, that's a whopping decline. This is a nice leg, but it's only a leg. But the fact that November has started with a new recovery high, that is very important. So Alcoa, at this particular point, is up very nicely in the Trader's Corner. As I say, up between 15.5% and 16%. The day is young. They could give them back. I'm trying to do for you right now. What is the lettering? This could either be new. This is either old F or brand new C. I'll explain why it's not necessary to get into a panic saying, oh, F is very negative and C is very positive. How does he even get a C? I'll go, if I have a chance today, I'll do it, or maybe tomorrow. There's plenty of time. Most importantly, it's getting into the rectangle on the upside, the same as we were looking at in the E-minis in the 120-minute chart. Remember, patterns repeat. They don't repeat once. They repeat over and over, and they can repeat in the E-mini futures to a coal stock, to things that you'd consider even negative, an opposition chart. It doesn't matter. Patterns repeat because all we're doing in the stock market, it's a price point of human emotion locked-in time. Let's call it a fixed price point. Even this minute that I say Alcoa is at 964, that's this price point right now. If it goes to 965, which it just did, and then back to 64, that's what we're looking at, okay? Now we've got a new one. Should I discuss this one? I don't really want to yeah, I will. I mean, if I'm going to demonstrate, I'm going to demonstrate. In the daily chart, we bought this little coal stock, Arch Coal. We bought it down at the $4.10. We actually bought it before, and we lost a little money. I really wanted to stick with it, but the percentage loss in a tiny stock is big if you get too carried away trying to buy and hold, unless you're in a really good position. So here we are. We bought it back again at $4.10. It is up at 442 more. And this is the whole thing about Chapman Wave methodology. When you get a start and a restart, this is a restart. I know I get a lot of questions from subscribers saying, we're still not 100% sure of that restart. We know that when it works, it's fabulous. I will spend time on the buy signal, the restart, and the buy mode. You start to pick that up. I get emails all the time from people saying, wow, just sticking with those basics, it is so calming. It just gives us a sense we know what we're looking for. We know where our stops are. We know what's going to happen if everything succeeds, because you will go to a D. Will this go to a leg D? I don't know. But it's already 442. It's already up almost 10% from where we bought it. So I think that's nice. I don't know what to say other than between 9 and 10% in a low price stock is what you want for comfort. That's all you've got. There's a little bit of comfort here. There is a left side, right side price time match to, I'm trying to get to the low, the gap down low of 452. If it does in a leg C, that's positive. If it does in a leg D, I'm just going to have to think about this. Are the technicals still good enough to hold? Is the weekly chart in a brand new leg B way under the 525 previous high? Is this something to buy? Well, that's what we're going to be looking at, because I think we're getting a little toppy here. I hope to be able to get into that. I need to go through this because there are people that are asking me about my methodology. And my methodology says we look for leg Ds. You can go higher, and I'll teach you. And there's the 120-minute chart of ACI trading at $4.41. Look at that. That beautiful, I drew that in a while back. That dashed line, this 120-minute chart, shows the resistance. What did it hit today? Boop, right on the resistance at 448. It's pulling back a little bit. This is the target line. That's the target price, and it's got until tomorrow, the 5th, by 1:30 in the afternoon to at least attempt to get to that level. So, and the MACD and stochastic are still quite good. The stochastic's at 73%, not good enough. And that says to me, I can't be patting myself on the back on this one. Anything can still happen. We've got an. Yep, that's it. I hear we've got a break coming up. I'll talk about peak E and GE. We got in and we're in with a nice profit, maybe a 2.5–3% profit. Is this a buy and hold? Is this the kind of area? Are we looking at a rotation into the steels, the aluminums, and stocks like GE? I'll talk about that when we get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 20 and the S&P's up 0.84. Now, let me continue because, as I say, I'm an advocate for the Chapman wave. Done it for long enough. I know, and many of you know, many of you are using it more and more. Every day I get information from people that are using it and telling me what how it has helped them in their projections, in their time projections, in their price projections, just the patterns themselves. And for those who are fairly new to it, they look at the patterns and now they're introducing themselves to the actual wave count. And as I said, look, GE is possibly making a peak E today with 2664 as the high. That's the daily. The stochastic is at 91%. That's good. The MACD is still good, although it's flattening out. The 9-period moving average is down at 2610. I have some signs that are saying GE should pull back here. Don't just short term, expect it to pull back. But the weekly chart is what I'm looking at because it's bumping into that inside track. The Chapman wave methodology, in my CD introducing the Chapman wave methodology, I talk about this inside track. And, you know, there's a great thing to do. You go edit. This is $249 value at TFNN. And all you need to do, so this is going to be inside track. So all you need to do is, if you sign up and this is the early bird special. It's just about to finish. You get $200 off. It's $7.95. You sign up, today, tomorrow. You got $5.95. You get $200 off. I'm giving you $249 value. The CD introducing the Chapman Wave methodology, 476 slides plus a glossary. Just the glossary alone. Let me get to the plus some cartoons that I drew many years ago. The glossary is from page 458 to about the end. So you've got almost a 16-page glossary on different techniques and different parts of the Chapman Wave methodology that I explained even in greater detail. And then I throw in my opening call. I'm talking about every single position we have, and I think this is the most positions we've ever had. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 positions as I'm talking, ranging in gains. Even this morning we went short, and that's we went short a particular position, and that's up almost a point. So we've got gains in every single position. I can't remember. 1, 2, 3, 4, 5, 6, 7, 8. 8 is about one of the highest we've had in. I usually like to stay with 6. Excuse me, maybe 7 positions, and we follow them closely. We can add to those positions. The add tos are like a separate position because it's a shorter term trade. So the positions are. Alcoa at this particular point up between 15.5% and 16%. ACI up about 9.5%. BIS up about 1%. GE up between 2.5% and 3%. IBB we just got into today. RAD up 190% on the remaining position. We've already taken a percentage off at different periods. Still have a good core position. S is Sprint up 24%. No, I'm sorry. That's not Sprint. Let me just show you the chart. So the G position, this is possibly, if there's no new high this week, it's a peak D, bumping up against an inside track, which I was going to show you. I'm going to leave that just for the moment because I also want to show you the monthly is saying G is just getting into some kind of resistance in leg E. So you've got to be a little careful here. One of the reasons why I'm saying this is, I say to my subscribers, this is a position where we're either going to be taking something off, but if we have a small position, we're going to be look to see if we're going to add, or if there's a really nice gain, it looks like it could pull back pretty deeply, we might take something off and look to come back in later. So let me just show you this chart of Sprint. S is the symbol trading at $6.97. So when I looked at it a little earlier on, it was up 9%. It's up over 9%, and we just got into it fairly recently. What was I looking for? It's the same discipline of looking for that leg D. Leg D will start if it goes 1 penny above $7, and that's where I can start to make other decisions. Stochastics at 85%. That's what I'm going to teach you. How do you hold positions? How do you look to get out once it quickly gets there? What are the indicators that say hold, hold, hold? Don't get excited. You've got a gain. It's not a matter of being greedy, or just a matter of being disciplined. And that's how we do it. Then we've got the 120-minute chart that we look at. I'm going to teach you about the shorter time frame. So here you are, $249 value. Throw it in. And the quicker you sign up, the quicker you're going to get the CD. You can get the CD afterwards because I'm going to be going through the CD at the same time as we've got the workshop all day Friday, 9 o'clock until 4:30. That's 7.5 hours. Before that, if you want to send me a couple of questions about certain stocks, I will try to relate it to exactly what we're looking at and why we've been looking at it, good or bad, and where it fits in the waveform. So Sprint is acting very well right now. We've got another one. We've got United Steel. United States Steel, X, up 24%. I'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, Tiger Technicians Hour, and the author of The Opening Call. That's my daily service. Now, you get a month of my daily service free. $128 value, 30-day you get a 1 month. It comes to you, you can assess it, you'll be able to follow all the trades, and believe me, by the end of this week, we will be starting to put in new trades. I'm starting to look at more at the short side than the long side. We actually are short the Dow from that peak T, because that's what we do when I get technical verification of some kind of divergence that's negative. If it's taken out, it's fine, because we will still make a profit. We were able to short it just 18 to 20 points off the all-time high, so we at least have a cushion. Fabulous timing based on that same methodology. So please consider this. I'm making it all week. I'm going to make it my absolute duty. I feel that I need to do it. There are so many people that just are in a position right now of saying, oh, the market, what is happening? How I get my friends look at me and they say, what's happening with this crazy market? When they say that, I almost always know that they are way under invested in the stock market. And what has happened? Or they've just started to go back in. And I just know that from experience, and I'm saying to myself, no, you can be as nervous as you want, but if you pick the sectors, and that's what I've spent time on. Look, here is USX, United States Steel. It goes from $70.95 down to $15. I mean, if you got that H pattern that I was looking at, if you got the cup pattern that I was looking for, leg D, where's leg D? It has to go above. I wanted a price point above 26.39 to be able to verify that I had a price time match, but it was in leg D for weeks. Pops today to what? 27.33. What did I say to my subscribers? I said that there's a chance that if it does break above, at any point above 26.29, then the 27s will be, that'll be fabulous because it basically raises the base. Who's talking about steel stocks? There's another one. This is leg F/C. Do I care that it's maybe F, which means you can come down really sharply, or maybe C, which says you can still go up to D? No, the technical's at 85%. The MACD is good. I can deal with it if it's a doji candle. There are certain things that I will demonstrate tomorrow for my subscribers. We wanted to go to a leg D. It went to D. Now it's either recycled to a brand new peak A right there, peak B, not E, and now this is C. Or, based on the 120-minute chart, which is in a peak D with a doji candle above the resistance that I showed this morning in the charts, this is what we're looking at. 9-period moving average will be supported 25.88. If that inside track, now I can teach you what the inside track is. The inside track, there, that's the inside track. It's called the sell zone or the buy zone. Oh, I'm wondering why the throat. The voice is a little scratchy there. And that's fantastic if you learn how to use that as a price target. And then you deal with what happens when it reaches there. That's exactly what we're looking at. Right here. It broke above it. All we have to do is say, stochastic at 90%, MACD is still expanding, way above the 9-period moving average, gives us a little time in which to decide. Take profits, wait to re-enter. Don't take profits, but take fabulous action. Peak D can certainly pull back, but at 27.01, do we want to give up gains? Maybe we'll take a little bit of the position we have and say, I'm going to add it back in a certain position. Maybe we do nothing and say, this is great. US Steel is making an intermediate term signal. It might do that, and then we want to add to the positions. So that's what I'm looking at. I'll do, I spoke about S, and I said that it was, I want leg D. That's the methodology we're looking at. Now, Sprint has a huge history, but that got negated when they joined up with Nextel. So they started a brand new price move. I can't believe it. I love looking back at charts. Well, being new doesn't bother me. Remember the other day we were looking at, I've still got it here, TCS. What is TCS? The Container Store Group. Came public the other day. It had barely begun trading when I said, we've got enough information to say that this huge leg with a round number 30, what happened? I thought it was a 30. They changed it. That used to be 32. A close at 35 round number, but 32.10 was the high, was the low. I thought it was 32. I had 32. Anyway, it ran up into single leg A. Then it pulled back. I was looking at it right there, and I said, this thing has started, even though it's a 2-minute chart. It has no history at all. It has no more than 2 times 20, 40 minutes of trading. We could still use the Chapman wave methodology to get to D, and there it was, leg D, peak D, and then it pulls back. So the technique is applicable to monthly charts, to daily charts. It doesn't matter. So now I'm looking at my thing. Yes, you can see the numbers very clearly. It should be clearly marcated, demarcated. Now let's go to something else. I wanted a stock the other day. It doesn't bother me that we missed it, and I'm showing it right here. Why? Because we have a little proxy for it somewhere else, so that doesn't matter. Look, KOL is the Market Vectors Coal ETF. It goes all the way from 51.87 back in April of 2011 to $17.16. Monthly chart looks terrible. But there's a W formation in the stochastic and a W formation with a more positive divergence in the monthly. And that says, hey, if finally it can start to trade above the 9-period moving average, which is at about 20.10 right now, price is at 20.24, this could actually be moving higher. Not only that, in the Chapman methodology, the high of the 20th of September of 20.54, we should be seeing a leg D to the upside as the MACD climbs. Stochastic is at 86%. But it's the daily chart that I spent time on. So I said the other day to buy it on Friday, to buy it at, start a small long at 19.71 with a 1-point stop. So what was the low? The low was 19.84. And I said, I have to always look it up, I said 19.71. So we missed it by 13 cents. And now it's trading at 20.27. Is that a big deal? I really don't like that. It's upsetting, but it works sometimes for us very well, and sometimes it doesn't. For instance, there's a stock that we bought at the exact low on Friday at $1.30. I don't like to make my newsletter a small cap newsletter, a micro small cap newsletter, but if there are really good acting stocks and they can give a nice percentage gain, right here we'll be getting to a little bit of a toppy period. I would rather put less money to work and get the same gains or better gains than to put more money. But it doesn't bother me on the short side. I like the higher price stocks because it gives me some flexibility. Now, here's what's interesting about this. So KOL is trading at 20.27, Market Vectors Coal ETF, and it made a pattern that I'm going to be teaching later in the day, probably, or at least after we've gone through the workout of getting to D, and that is where you get to a C1, peak C, but then the next one pulls back after just failing near that peak C, and then it maybe happens again. That's peak C1, C2, C3. We've seen that in the euro. We've seen this in the currencies very often. I learned this the hard way, that there are times when you actually get a top that just fails by a fraction to make that leg D. But everything else, this is almost the same principle as the phantom peak that I'll be talking about for the very short-term traders who come to my webinar this coming Friday. How do you trade that? What is the phantom peak? How can you use it? And I say legitimately. By legitimately, I have a formula. I have a methodology. I never break that unless there are specific specifications that say at this particular point, if you want to still be right, you better be more conservative and give yourself a lead in by saying we might be ahead in the lettering. And if you're not, it's not a big deal because you'll still get to that lettering. But at least you're aware that you could at some point pull back really quickly and still be waiting for the leg that you thought would come in and never did. And this is one of the techniques. So it goes to C1, C2, and it bumps what? It bumps that same thing we were looking at. Remember? The sell zone. And what does it do? The Kel zone. It pulls back, holds the 9-period and moving average today, and is attempting to break above 20.39. If it does that, it starts an official leg D, and that means it's done its homework. That D can either be a top, but it could also recycle. But here's something even more interesting. Look to the left side. It could then tackle the previous high of 20.54. So does it mean that we're late and we aren't going to ever get into KOL? I would have preferred the position the other day because I felt it gave me a lot of flexibility and comfort if we were in it and did today what it did today. That's not the point. We could be getting to a leg D in the weekly, which says, all right, you get to leg D. That's where you could pull back. Then former support and resistance are the places to look at. I'll be teaching all that. I'll be teaching how many times have we seen just today that the peak D is so important. Coal made a peak D at 51.87 in April of 2011. It's pulled back to a trough E, and it's trying to rally. So these are all the techniques. Let's go to Garo in Newport Beach. Hi, Garo. How are you?
Very good. Thank you, sir. How about you?
Very well. Thank you.
All right. Today I'm going to ask you about that GMCR, please. About 2 weeks ago or a week or 10 days ago, I asked you, and you really didn't like it at all. You see, I haven't bought it. I'm waiting for your blessing when to get in. I don't want to break my own laws and rules, so I didn't buy. I'm waiting to cross that 200 days moving average. The simple and the exponential still is just hovering there.
Right.
According to my charts, the buy signal that he gave to me, it was on October the 28th. And I hesitate to buy it. I waited, and now it's 1, 2, 3, 4, 5, 6 days that the SAR parabolic dots are at the bottom, and that was the first day that the dot came down was on 28. What is your idea?
Okay, folks, we're looking at GMCR. Now, GMCR is a stock that had been for quite a while. Basically, it was the Tesla of coffee. I'm going to just give me 1 second here, GMCR, and I'm going to look at it in. So this is Green Mountain Coffee. I wanted to also get the SAR here. So it needs to break above. Okay, yeah, so it did that. Now it's actually in the area that it's already in the buy zone, right?
Absolutely.
So, okay, I've got to...
The 5-day simple moving average has to cross that 200 days. So I will get in. Yeah. Go ahead,
but even more important than that, what I'm looking at is that this is leg B making a cup formation. Folks, GMCR was the stock that just went straight up from round about the 20s to 115.90. I think that's actually pre-split. I think it was even higher than that with the post-split. I don't have it. I'll probably have it here. Let me see if I pull this back enough. I'm sure that you'll see the letters on the top. No. Okay, so this is fine. So now what we're looking at, which is very interesting to me, is that in the daily chart, it's in leg B. In the 120-minute chart, it's in A, B, it's in leg C. So that says it still has room to go to the upside. The left side resistance that I was looking at would have been 65, 68 back on the 18th of October. And then the little gap down, and the high of the gap is 66 on the 17th and 66.69 on the 16th. So the 65-ish, 66 area would at least be a target. Now, what's really interesting for me is that I'd said to you that, in my estimation, although there could be rallies in GMCR, the monthly chart and the weekly chart was saying, be very careful for a couple of reasons. Most important is that the downtrend, the major tide, still appeared to be down, and that how it rallied and handled the 69, maybe the 71 area, and any major bounce from here, and then if it failed, it would then probably go to a lower low. But on a shorter-term basis, and this is the way you like to trade the stocks, is that turnaround in GMCR, basically the candle of the 24th of October, going into the test of the 9-period moving average, the one that you're talking about where the SAR came in, and that's the parabolic SAR. It's a resistance or support level that is broken. And in this case, 64.48 on the 28th of October, that candle, and then filling in the wick. You see, without today's candle, I would have said to you, whoa, be a little careful, because you could get the H pattern. If it breaks the low of Thursday, 61.56, everything about it says there should be a test of the low of 60.15. Now you've got a confirmation. The MACD's turning up. In fact, I'll do this. I'm just, as we're going to the break, on the daily chart, I'm going to make it a little bit bigger, and I'm going to say, in the technicals on a Chapman wave methodology, you've got a low bar. The stochastic crossed 20% for a buy signal. They went to a buy mode above 20%. The MACD has just turned up. Everything about it on a short-term basis says that it's in a buy signal, and it should touch 66. I'll be right back with Gara.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online Master Trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online Master Trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back, and we are back with Garo in Newport Beach, California. We're looking at GMCR, Green Mountain Coffee, roasters, distributors, coffees, teas, single cups, etc., 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 etc. And I'm going to suggest something. You would have got in around about the 62.5, maybe 63.25 area. It's trading at 65.07, so it's already got your 1 3/4 points gain, maybe 2 points, and you'd like to go for the 3-point gain. However, I would consider that based on your methodology, probably to get those 3 points now offers a different kind of a risk to how it did just a few days ago. That's not to say, and I just wanted to go through this again, this is now a buy signal in GMCR on the daily. The technicals are all confirming. It says that it should test the 66.23 area. That's a point and a quarter or higher. It's a 65 now 15. And there's a good chance it's going to test the candle of the 15th of October to 60, between 68.80, and its high was 69.39. That will be on the short-term basis, and my guess is that 69 level 9-period exponential moving average resistance is going to be resistance in GMCR, but it could be one of those situations where you've got a counter-trend rally when some of the sectors in the market are beginning to weaken a little bit. So I'm going to make the suggestion, only if there's a pullback to 64.70, 64.60, could you even nibble at this, and it would be a nibble because it didn't. I don't want to change your methodology. You've got a great methodology. You should have bought it and you hesitated. It doesn't matter. There's going to be another opportunity to do short or go long one of these stocks. So don't think about it that you've lost it. But I just want you to go through that the 120-minute chart says there should be higher prices, number one. Number two is that the daily is saying it's a counter-trend rally, a lot of weakness in the weekly, and I suspect it will fail. But the way it's acting right now, this thing should test the high 67s, maybe the 68s, and that 69 level is where there's going to be resistance. So I hope that helps you, Garo.
All right. Absolutely. Absolutely. Thank you, sir.
Thank you so
much.
Thank you for calling, and have a great day. So, folks, let's go on. I've got this webinar coming up on Friday. That webinar, I'm going to cover specifically, I'm going to go through step by step. I'm going to show the examples, the real-time examples. I'll also go to real-time, but I'm going to be showing what we have, why we have it, and if you are new to my methodology, not new to my service, that's something else again. But if you're new altogether and you sign up, you will get the CD. If it comes next week, it's not a problem because you can have 30 days to archive. I mean, imagine having 30 days to go through every section you want over and over and over. To me, that is really important. So I'm doing this. I'm taking time. I'm going to take time. I'm just going to do it. As I said, I'm an advocate of the Chapman Wave methodology. You can see I've got the stats right here in front of me. Just fabulous. All the positions we have at this particular point right now are winning positions. So, and that's short side and long side. And that's just, and then the discipline has to kick in. Will I get out with lesser gains? That's okay. It's fine. You've got to gain. Gains are what makes the market. You want to stay in for the long term. I'm going to deal with the psychology. I'm going to deal with the aspects of, I don't know if I'll find that cartoon right now. Oh, man. Let's see if I can. I've got just a moment here. And then you've got Larry Pesavento coming on, and great, okay, like, it goes up, just as I am. Oh, man. I thought I'd find it right away. I'll just go to this one, number 374. 374. As we're going out, you'll see this cartoon. 374. What does it say? It says, oops, come on. It says, husband and wife climbing up the mountain, says, this reminds me of the stock market. How come? As they're getting to the top, and he looks over and he says, what goes up must come down. So that's what we look at. We look at trends. I'm going to show you how you can work with trends. I will follow up with you as many times as you want in the period after the webinar. Hey.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.